It's November. We've got a market update for you for the Austin real estate market. And well, the number of listings is down, but inventory's up. How is that possible? And what does that mean for pricing? We're going to get into all of that as we dive into the numbers. I'm David Shapiro with my colleague Lee Abraham. And let's go ahead and talk about what we're seeing here in the market. So here we show the number of active listings going all the way back to the beginning of 2022 when the market was red hot. And you can see how few active listings there were back then. And that's increased. And so here we have, it peaked around 2,600, came down a little bit in early, which, looks like just seasonality. The number of listings sometimes comes down over the winter. And then as we went into the spring of 23, more listings hit the market, peaked at about 2,700. And here we're down to under 2,600 active listings. So there's actually less listings, but because of demand, it has impacted the monthly inventory.
Right. So, David, when we take a look at this particular chart, the key variable is the 30-day pending sales that we see down in the bottom left, 522. Now, just for purposes of reference, last month in our report, we had 661. So a big drop in the number of pending sales. There's 2,586 active listings. When you divide the number of sales per month into the number of active listings, we're at almost a 5-month inventory. And so compared statistically to certainly the average over the past 12 months, we're looking at almost 700 sales a month. And then that kind of tapered off as we get closer to the present time of, again, just over 500 sales a month. So this monthly housing inventory, once you get to around 6, that's technically defined as a balanced market, 6.5 month inventory. That's important from a value standpoint, and we'll talk more about it throughout the video, because at that point you begin to look at an oversupply relative to demand, and that can be the tipping point of market value, where you begin to get devaluation rather than appreciation. We're certainly not at that point. We talk about year over year average pricing and all that, related but not exactly the same conversation. So we'll just parse away the layers here as we go through the information.
So we've got inventory up from 4 months of inventory last month up to nearly 5. So that's a pretty big jump month to month. You can see we're kind of stable within this range. So this is breaking out in terms of the number of months of inventory. So what would you think would happen with pricing, considering that months of inventory has gone up? Well, let's talk about the demand side of it first. So the number of sales down 9% year over year. And Lee, the other thing that we take into account is that we're doing this right at the beginning of the month. Not all the sales have been entered yet. So
correct.
Last month, we saw this number jump by about 60. We reported 591, and it ended up at 649. So, if we get another 50 sales here, we're going to be right about flat with the number of sales that there were last October.
Yeah.
But obviously way down from previous years if you look back. So still, this is not, even though it's going to be in line with last year, it's definitely out of the norm, the few number of sales that we have in October of both last year and this year.
And I don't recall if it was last month's video or the one before where we were talking about the new normal. Is this the new normal? So when you're looking at year over year, 2022 to this year, that's kind of what it looks like in this interest rate environment.
Yeah, I mean, it's the new normal for now until the interest rates change.
Yeah, correct.
So, all right, and then here we have it. The average sales price is actually up 0.3% year over year. So from 820 grand to 823. So not the staggering drop in prices I think people were expecting to see, hearing that inventory has gone up. Could that be on the horizon if inventory continues to go up? Possibly. But sellers, in my opinion, are just not really wanting to budge on their prices. They have this reference point of what their home was worth a year and a half ago, and they're not ready to give up on that price just yet.
I'd like to just point out it's 2 months in a row where we've had an increase year over year. And again, the doom and gloom forecasts that we heard 18 months ago, a year ago, just don't seem to be coming true in terms of pricing and value stability, which has been our forecast as the market volatility. We've kind of ridden through most of that at this point. Hopefully, we'll talk more about the Fed funds rate as we go forward.
Yeah, I think a lot of the doom and gloom people would say it's still coming. And who knows? I mean, maybe it is. But I was listening to an interesting podcast and they're talking about well, what point do we call the soft landing for the economy? Right? Is it a soft landing? Well, now that it's been over a year that we've been asking, is it a soft landing? Does that mean we executed the soft landing?
It,
So it's really
yeah.
hard to know. I mean, I think what's going to happen, and the buyers that are sitting on the sidelines thinking like, oh, I'm just going to wait for the market to drop. That's, again, I'm going to just remind you, that's called timing the market. That is a losing strategy, because what's going to happen is before you know it, you're trying to time it, all of a sudden it takes off, because we don't know when that's going to happen. There's already buying opportunities right now. And so if the timing's right for you, you should go buy. Don't try to time the market and wait for that perfect bottom of the market price point, because that's nearly impossible to nail. And I think prices are going to be higher in 3 years than they are today. So if you have a long-term outlook, you're going to hold your property for at least 3 years. This is a good time to buy.
Yep. Okay, so days. We're still in, significant year-over-year increases. Kind of this time last year, the tail end of the historically strong sellers market, and again, month over month, also up. I think we've got a combination of things going on here. Seasonality is starting to creep in just a little bit as we get into the meat of the fourth quarter, but still in a reasonable range: 60 days, 59 days to sell. No cause for alarm here.
Number of new listings down 7.5% year over year. And, just not a lot of people wanting to sell. I mean, now we're going into the holiday season, so less people, that's just the normal seasonality. But just this trend of people with 4% or lower mortgages that normally would be moving at this point, not putting their homes on the market because they don't want to give up their amazing interest rate, which is probably the right financial decision. As long as they can make their current home work for a little bit longer, they should probably do that. The sales price to list price ratio. So this is that voodoo indicator, just more of a sentiment number, and pretty close to flat. So I don't think too much to talk about here.
Spoiler alert, it's even flatter out in the burbs, and we'll get there, but even tighter out in the burbs.
Yeah, and so just to be clear, what we're talking about now is just within ACL, Austin city limits, and we're going to talk about the surrounding towns and suburbs of Austin, the rest of the metro area here shortly. All right, our listing barometer. So this is the most real-time stat in terms of tracking what's going on in the market. So this is a really good tool for sellers or buyers trying to make a decision. And when you look at this 100% line. So if it hit that means we have the exact same number of listings as sales for the week. And anything over that means we have more listings, so inventory is growing. Anything below that, like this area right here, that means there's been more sales and inventory is declining. So last week there was 146 new listings, 133 pending sales, so 110% rate. So just barely over, which is quite a big difference from what we had in the previous weeks, most of which were more significantly over. You can see in the 160s, even 180%. And big drop here in the number of new listings, as we were talking about, always over 200 for the past basically 2 months, 3 months. Wow. Basically, as far back as we can see here, except for 1 week, it was over 200 new listings,
Right.
and now it drops to 146.
Right. Yeah. So, we'll track the numbers for the rest of the fourth quarter as we do month to month. I'm anticipating relatively benign numbers here. I don't see the barometer jumping up for any particular reason over the next few months, but we'll see how it plays out, and that's why we track it. So, David, federal funds rate, no change. So what does that mean for us as we go forward here?
I mean, I think the longer we stick with rates at a specific, level, I think the more comfortable people get, and they eventually say, well, I've been putting off this move long enough. It's time. I got to make the move, and I got to just bite the bullet and pay a little bit extra, or a lot extra to get the house that I need. And so I think that's one thing. I mean, I think for different people I'm listening to, there is a chance that a recession is looming. That doesn't mean a crash. Generally a recession does not equate to a decline in real estate prices. There's some things that happen that are good during a recession, which is that the federal government wants to stimulate the economy. So the Fed lowers interest rates, which is great for real estate. So a recession could actually end up being a net positive for the real estate industry. Obviously, recessions have downsides too, but a recession doesn't need to be 2008 or 2020's, very fast recession. It's a month or two long recession. Like, that's not how most recessions are. It could just be the definition is a decline in GDP for, I think, two consecutive quarters. So that just means that we're not growing as fast as we would like. So I think if the Fed decides to lower interest rates because the economy is not where they want it to be, that's ultimately a net positive for real estate.
Yeah, we mentioned it over the past couple of months. When is the best time to buy real estate? Before the rates go down. And so rates are holding steady. We know that. And when I checked the numbers earlier today, looked like the rates are softening up just a bit the day after the Fed didn't make a move. So
Yeah, I found that doing the opposite of what everybody's doing, if like the masses are thinking like, oh, well, interest rates are high, so I have to wait to buy. If that's what everybody's thinking, which I can tell you, that's what most buyers are thinking, because they're not even coming to us often and asking us, like, hey, what do you think? Do you think I should wait? I think a smart buyer would be coming and having the conversation like, hey, here's what I'm thinking. You're professionals. Why don't you try to poke holes in my argument? All right. So if somebody came to me with that, I would say, well, if everybody's thinking that and they're waiting, and then rates come down, what's everybody going to do? They're going to be, oh, it's my opportunity to buy, and they're going to rush in, right? Wouldn't you want to be one of the buyers that buys when interest rates are high? And then when everybody else is rushing to find a home, you already have your home, and you're just casually going over to a bank and saying, hey, can you refi my loan from 7.76% to 6%? And that's going to save me a bunch of money. I've already locked in the price on my home, and I don't need to be a part of this mad rush to the doors to try to buy this very limited number of homes. The number of homes on the market is not that much. We showed that the monthly, housing inventory in terms of, number of months is rising, but that's because demand is dropping. The actual number of homes on the market is still quite limited. And the number of like quality great homes is even less, because those homes, I'm telling you, that are priced right, they're still going to multiple offers. We're talking every week with all the top agents at our brokerage. There's, several, I think there's close to 1,000 agents at our brokerage in Austin. So the top 20 agents, we're getting on a call and we're talking about what we're seeing. And that's kind of the theme that we're seeing every week, is that properties that are great, that are priced right, they are going to multiple offers because there's so few of them. And the properties that are sitting, this inventory that we're talking about, those are the homes that are, they're just okay. And in the peak of the market, they would have still sold for a good price. But now buyers have more options, and those properties are getting passed up because demand is low. So I think there's still a good opportunity for buyers to really take advantage of things before everything gets hot and rates do come down.
we can call it the contrarian school of real estate.
There we go.
Yeah,
I like being a contrarian.
there you are.
All right, so we've talked about the city. Let's talk about the suburbs, and we like to break it out. Most of the stats you'll see on this, it's just lumping Austin into the whole metro area, which I think skews it a bit. So this is actually separating it out. So Lee, why don't you talk to us about the monthly housing inventory for the suburbs?
Yeah, so kind of a similar ballpark as you look at the suburbs compared to the city of Austin. Here we've got just under 8,000 active listings. Again, we're talking about a 5-county area, and so a greater number of sales, 1,700 pending sales over the past 30 days. That gives us a 4.67 month inventory. If you look at the closed sales from the past 30 days, past month, a little bit less, 1,600, and a little closer to that 5-month, 4.9 month inventory. So out of town, actually, in this particular case, David, kind of flipping the script a little bit with a lower monthly housing inventory than in town, which has not typically been the case in our previous reports.
Number of sales. So again, this is an indicator that will change. So, there's a chance that we get pretty close to flat for the number of sales per month from 2022 to 2023. And also month over month, it'll also be pretty close to flat. The average sales price down 5.1%. So price is not holding up as well in the suburbs, but still really not that bad considering everything that's been going on, down 5.1%.
And as compared to the in-town numbers, just to contrast and compare a little bit, still haven't had that year-over-year increase that we've seen in town. And so not too far off, but still lagging a bit. And now your days on market, again, more than 50% up year over year, but an actual drop just under 5%. And again, hovering right at about 60 days here. We've got 62 days on the market for the average home to sell.
Yeah, so definitely the stats here outside of the city limits are showing a little bit more activity, right? Because you got the days on market going down, the number of sales are about flat versus down a bit from, well, if we go back to the number of sales, the big drop was from previous years to this year.
Right.
And not as big of a drop. I mean, obviously from 2021 and 2020, which those, were anomaly years. The market was extremely hot, low interest rates. But if you go back to 2019 or 2018, you can see the difference. The one thing caveat with the suburbs is that my guess is that the number of homes, so not the inventory, but what's the term for it? For the total number of homes that are actually in existence in a market, the housing stock is the term. So for the housing stock has actually probably grown more in the suburbs than in the city.
Oh, yeah.
Right? Like there's just more room to just, put 500 homes in a new subdivision in the suburbs. So that's another thing to just take into account when you're looking at some of these numbers of why the number of sales is able to stay more stable, but it's really hard to parse that out, but just something to keep in mind.
Right.
All right, number of new listings is actually up 2.5%, and month to month it's down 7.8. What are your thoughts on this, Lee?
It's just a stable sort of fluctuation that we're looking at. I think it will likely continue to probably trickle downward month over month, perhaps, for the next couple months to round out the year. So it's in alignment with what we've seen over the past few months, and no news here.
Sales price to list price ratio.
I told you it was tighter in the burbs, folks. I wasn't kidding.
So month to month up slightly and flat year over year.
My calculator refused to give me a number on the year over year. It just zeroed me out, and I had to respect that. But by golly, between 97.42 and 97.48, things are moving up. Sell price, list price ratio. So what does it mean? It basically means, David, that we are in the new normal. And yes, it's until interest rates change. But that's really what we've got is the agents have kind of settled into it as far as list prices. Sellers have adjusted expectations, those that are willing to participate in the market. And we've got some balance and stability. When you take a look at that in context of the Fed fund rate remaining stable, as we get into the holidays, obviously there's some macro issues, serious issues in the Middle East, as well as in Europe, and all kinds of issues that could impact us, will impact us here domestically. As far as the things that we have some control over, I feel like, hopefully we're going to have a good fourth quarter, at least here in the Austin real estate market.
All right. Well, that concludes the stats portion. So, I think that, the takeaway here is that we're still seeing stability, but there's definitely something to watch with inventory rising, with demand down quite a bit. So we'll be tracking that pretty closely here over the end of the year and see what that does. Keep in mind that generally in January, there's a bump in activity in real estate. People go into the holidays, they start thinking about their goals for 2024, and they think, man, I didn't buy that house in 2023. I really wanted to do that. You know what? I think I can do it in 2024. And so people come out of the gates in the early part of the year trying to do some things that maybe they weren't able to do the prior year. So, I would anticipate an increase in activity. The fact that demand has dropped a good amount in October. We got November, December, the holidays. I don't know that anything drastic is really going to happen over the next 2 months before we get into the new year. But for those of you that are buyers, it is a really good opportunity. So please, hopefully you can take that to heart, because we truly feel that way, and reach out if you think we can help you. Info is below. Shoot us a text, email, whatever is best for you. You can give us a call. We'd love to chat with you more about that. And if you got a lot out of this video, please share it with a friend, give it a like, and go ahead and subscribe so you can get updated about our next video. Look forward to talking to you soon.
Thanks, everybody.